Hey, what's up, everybody? Getting started here. Good morning. A little late start here. Sorry about that. How y'all doing today? Hit the smash that like button, friends. Let's get ready to get going. Open up SPY really quick. A bull long up. Things looking nice and tasty for SPY. Skip the intro there. All right. Good morning. How y'all doing? Can you hear me? Thanksgiving. Hope you guys had a lovely holiday. Black Friday today. It's gonna be a light trading day. We've got a nice little signal. SPY bull long up. It's a long out the door with an average down 401, long with the stop 4 today. VIX is mean reverting short down. We've got all the good signals. VIX is agreeable. The S&P. Let's double check so we got all the goldens coming through. Got doomsday bands all look clear, nice and steady. Nasdaq. Ooh. Hello, Nasdaq. You have sold off to the lower band. Doomsday of 82. That's great. DD trade probably on. Watch out for these higher highs. Get this bouncing off of there. That's a long entry point. Lower band. So let's look here. VIX and decay. Yeah, everything's great and lovely again. VIX is greater than 0. Our golden setup day. Perfect. They can be back to back. Double checking there's any kind of index catalyst. QQQ is a BLD, so let's take a look at what this is. This is a really easy one to know how to handle. You get the scalps between the two hedge pushers. I'm wondering what is going on with QQQ today. Which stocks have moved the most? Nvidia is selling. That's what we lost at the open. Apple, we've lost that at the open. That's a little bit. BLD is scalping between the two blue and yellow lines, and then of course a breakout is a breakout on the long side. This is what I call bear structure. It's always been a bear structure. It's a short against MHP just on Qs. Remember, SPY typically leads the way, so keep an eye on SPY. I normally expect SPY to pull Nasdaq out of the hole, not the other way around. You guys hear me? Check, check. Testing. Let me make sure this is all going through here. Check. Oh, okay, cool, 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 cool. I'm like, oh, thank God. Good morning, friends. Okay. So I think things are looking pretty solid today. I don't see any reason for alarm. Anything. Today, so for QQQ, this is a long entry point from here to here. If you're a bull, you're waiting for 87 to break. If you're a bear, you're waiting for 87 and a half to break. If you're a bear, you're looking for 87 to lose plus a point. And you want S&P to start showing signs of death. S&P is showing signs of life. We've got resilience greater than 0, so S&P is looking to build a gap to the upside. Normally what you'll see. Get my Discord up really quick. I see what we have on the scanner just to see if there's any good plays coming up from the scanner here. On liquidity map, let's for any of the other long up setups. For anything that's long up, see distance to hedge pressure, and let's do an add a strategy that's above hedge pressure. That have also broken to the upside. Look for stocks that are on the breakout side of this. Pinterest is one of them. Pfizer looks like it's one of them. Pinterest. The next patch, you're going to do the horizontal centering just like they've done the vertical centering. So here you can do like, if you want a number of bars above and below, you know, essentially where it's showing the display on the vertical side. The next thing I'm going to do is horizontally center as well, which should make it a whole lot easier. Yeah, to navigate. That's pretty cool. Let's say, so Pence is looking good. Yeah, everything's looking hella good. Kind of like day Black Friday, just kind of here, just checking out what's going on today. It's a really nice signal from a long setup here. I like that. Got about maybe 30-45 minutes. After this, I'm gonna go to do some more family stuff today. Going to brunch with my mom, Nicole's mom. Yeah, Black Friday brunch. Today over this weekend. Probably over the weekend. Yeah, I'm not doing anything today. Told you guys if y'all got 75 likes on that video, or whatever I said, I would make 2 more, and that was just to see how many people were here. I wasn't gonna bust my ass on Thanksgiving if only like 10 people were around. So same thing today. Like being Thanksgiving, you guys are probably just still doing stuff. So if I make the video, I'll just make sure I release it whenever everybody's around. So maybe Saturday. Any reason for alarm on anything today? I'm gonna see what is the major factor causing Q to pull back. Stocks are looking the worst today. Everything's looking solid. There's nothing that's really scary today. So as long as VIX stays below 8, that's good. UVXY stays below 8. SPY. I went ahead and bought some more QQQ. I pushed out to the 23rd or 25th. Let me see whatever was a Friday. 23rd. So I have December 9th. I went ahead and got December 23rd. So I pushed out 2 additional weeks for my trade. And still have my 9th. So to give it a little bit more room to flourish. So everything's looking good on SPY. Let me put the walls up here. Let's go ahead and put monthly up top. Looks like there's nothing in the way on SPY. Yeah, things are hella good right here. I like it. So back on the Adobe, just broke through hedge pressure. So I have a special breakout scan. If you guys use the Rocket Scooter scanner, I have a special breakout scanner right here that I'm using to look for stocks that are breaking out shimbo long ups. It's looking weak, but SPY's looking strong. And I'm not really sure if it's just because Black Friday, but stocks like Nvidia are starting to roll. So Nvidia is looking really good. Whatever dip we had on Nvidia, it's now opening, trading above open. So yeah, I know. I really hope so. Like we get lower bull tests. Yeah. Yeah, I can. Make sure you guys tap that like button. I'll share my breakout scanner strats with you guys. No problemo. I didn't even turn on the lights in here this morning, so no camera. I'm just chilling here in the dark. So mostly because I didn't feel like waking up, getting ready. I just woke up and came downstairs. I slept in just a little bit. Not normal, but you guys smash that like button. Get it to 50. We'll talk about my scanner settings while you guys are hanging out. I'm gonna tell you what I'm looking for the S&P. I'm looking for any long up setting as the S&P is a bull long up. I'm looking for other long ups, things that are breaking or above hedge pressure or above monthly hedge pressure, right? So long up, that orientation that we like. Then I'm searching for something that's above hedge pressure right now. I'm looking for something that has the condition of breaking through hedge pressure on the way up. It's like Adobe in this example was on the list, no longer on the list. So I'm going to look for something that is on the list. Like SPXL. Buy is breaking through yesterday's highs, I think. Wrong thing. I'm like, this is not SPY. Sorry. SPXL. Breaking through hedge pressure. See, not fully awake yet. So SPY is breaking above today's highs, not yesterday's highs. That's what I meant to say. Keep a look out on SPY. There's that entry signal I talked about this morning. Breaking through today's highs. So looking good. Resilience don't lie. Resilience positive. You guys love resilience. And there you go. There's the trade. Fill the gap, right? Resilience fills the gap every time. It is in the redistribution zone on the upside if it's positive and downside if it's negative. Pretty much every time. I don't think we've really ever seen it deviate from that trend of what that indicator does. The arbitrage between the S&P's value and what it needs to be relative to what the stocks are doing. There's that pop up and go. As long as the res is positive, things are going to stay nice and steady. Tim's eating leftover and taking YOLO. Yes, positions to pass your valuation for expires midnight on Sunday. Luck with it. You have to reset after Sunday. You have to reset it. Scanner settings looking for a long upset of broken through hedge pressure. Pretty nice. That's one special scanner setup. So I like this one. It's looking really hot. Let's get some. Let's get like a little. Welcome to the live stream of the best algorithmic trading community this side of Houston, Texas. Maybe the central area of Houston, Texas, like small, tiny little southwest corner. And this half of the block. Best algorithmic trading community on the planet. Hands down. The only ones that's invented something new. Everyone else mishmashes 100-year-old technology into a different recipe. They all taste like Pepsi to me. I'm Coke, to be honest. Coca-Cola. Ice, nothing better than ice cold Coca-Cola sometimes. Pepsi's good, but SPY continuing to go. Resilience is positive. So today on the scanner, like I said, we have Etsy, MO, SPXL, FLSR, NOC, RCX, Lens, Pinterest, Zoom. Being pretty steady there. Has anybody here tried any other algorithmic software out there? Anything that does trading analysis, anything? Even automated trading? Let me know some of your favorites. I want to know what y'all think is good out there. Okay, let's go. You see. Trading ticks. Trading ticks has some good functions. There's some of the people there. What is Apex? Never even heard of it. What do you what kind of a specialty is that? Is that software? This is one that I haven't heard of. We drink Dr. Pepper around these parts is what we do down here in Texas. I love myself some sweetened carbonated prune cola. Whatever flavor Dr. Pepper is. Prunes, I think. Oh, it's hella good. So if I continue to run, I mean, everything's looking really solid. Let's run a monthly map on SPY today. I want to see what the monthly map looks like. Take a look at SPY over the longer haul. I'll just do the classic app while I'm chilling here. Market Suitor Classic, man, I love the new. I had a new update come out yesterday. It's not anything on the platform. It's mostly website stuff. Just making it easier for people to access our tools. By the way, we have Black Friday special. If you want in to our group and you love what we do and you've always contemplated a lifetime, it will never go lower than this right now. 20% lifetime. Lifetime community is the next level part of what you do here. You can join, you can have early, not only is it full access to everything, you have early access to things where they release bigger things that we do, like bigger tools, and you can be part of the beta test of any new indicator we do. You can have it for months in advance, like with Doomsday. You can also have special study halls. You can be part of the discovery process, learn how our indicators work on the inside as we make them, and then be part of the process that votes on their application, and also use of the platform. Plus, your voice gets heard first because you're on a panel of people that votes things into existence into the platform. Like, man, I always wanted this one thing. Well, that's how you do it. You can be part of that process. 20% off for that Black Friday and half price off for the monthly sub for life, including all your data feeds and future data feeds. That's the value there. We start adding 2, 3, 4 kinds of data feeds. You don't have to pay for any of them as we expand and you have more features on the platform. Okay, let's do a monthly map really quick. Okay, so what I'm doing is I'm looking at SPY over the next month of data, right? So I'm going to go one day at a time. Oops. We'll do today the 25th. What I'm going to do is I'm going to come right here and do an hourly chart. I'm going to draw where SPY is splitting on bull and bear sides. This is one of the features of Rocket Scooter that will actually come out and be automated sooner rather than later. A lot of things coming through this month in the pipeline, which I'm super excited about. New features, new tools. I mean, it's going to be... December is going to be a huge change to the platform. So many things December and January. You will see changes literally every week. Big changes. A bunch of our new features are coming out. 402, 399. So I'm just splitting. Splitting the bull and bear side. Now let's go through and let's just pop on the second. Friday after that. Look at that, it's a huge split. 340 to 378. It is what it is, right? That is huge and different. Sorry, 378. Huge dip, huge volatility. Let's go ahead and pop it out one more day, one more week. 365, 345. And these are all my old gap fills that are still here from that old gap up here. And let's see, let's pop it out to the 16th. 360, 350. The market's still nice and bullish along that pathway, so dips can go as low as 360 and still maintain the bull side of the market. This just helped me see kind of the bigger picture. So there is a potential path for this to continue to trade down, right? But it is bullish, so bullish the whole way up. So the market, as you find lower lows on this monthly map, it means that people are willing to be bullish at a lower price. It means the market's becoming even more bullish throughout the month. This decay pattern is great for people that are bulls. Oh, these are all old gap fills. Let me just remove some of this. Upside targets are my gap fills. So anytime we're going to run, you look at these gap fills, right? Guys, don't mind tapping that like button here. Everyone in the morning, getting up and trading with us. We love y'all to death. If you haven't checked out the free trial of our platform, it's amazing. And it's free. What's up, Rozzy? Good morning. Coming from Bookmap, trying to learn about Rocket Scooter. Oh, nice. Yeah, we've a lot of people came to Bookmap. Actually, somebody, I've never used Bookmap. In all honesty, I think somebody had said, I tweeted the other day, said I've used, what'd they say? Retweeted it. A couple people in chat mentioned Bookmap. Somebody had said, I came here from, I'm only using it for 2 days and loving it already so much. I came from Bookmap and Spot Gamma, but this is much better! Exclamation point, exclamation point. Very lovely to hear the kind words. And again, those are all very established tech companies. So to be compared to them even being saying that we're better in someone's opinion is very flattering. So that was really nice to be said. What you feeling on the mouse? I like a Disney. Let me pull Disney up really quick on Rocket Scooter. I always huge fan of Disney. I love Disney stock. Disney's one of my favorite companies out there. Disney is my top pick for the year. Disney is nuking it today with the bull long up. It's a runner. Let's see where we do go in the top side. So it's a long up, a hedge pressure right here, 98, with that pressure pushing up. Let's see where we get Disney here. Let's look at the monthly scale on Disney all the way to 110. There's no support. There's no resistance till 110. I like Disney today. Beautiful. So Rocket Scooter is the principle here that we do that nobody else does is we can isolate the difference between us and major competitors or other technologies out there is ours stands alone. There's nobody even remotely close to what we're doing. that knows which options belong to you and which options belong to a market maker, delta hedging their risk. That's special methods we have here that will isolate real bull and bear side of the market. When you're above this blue line hedge pressure, there's a net push away from these two lines. This is all weekly options in blue, all monthly options in yellow. We split them up like that. You can literally draw the treasury map. Liquidity map will paint on the chart, or at least you can use your guideline where buyers and sellers can be. These arrows will show where buyers and sellers can be because of the net sum of all hedging activity. We can predict where it is. So an example, the one that says bull long up, these are all these letters stand for words. BLNU, bull long and up. For Disney, Disney shows that there is generally, if you open in support of the open, it continues to go. It's like a gap and go indefinitely until you find a resistance. Or you can dip to blue and come back to open, or nothing until yellow. So Disney, here's the opening price around the edge of this box. Anytime you support the open, it goes. Anytime you hit blue, it comes back to open. So there's two pieces of a trade: blue to open, open to go. So here's the open, there's the V, there's the support at the open, and there's the go. Just drawn out just like you see it. Again, it doesn't mean it predicts the stock market or that that will happen. It just means if I'm a bull and it's here, I want that to happen. And that's exactly what I'm seeing, right? So the stock market's less active. Golden setup today. Ladies and gentlemen, golden setup today. Did y'all not even know that? Another one. We released a video on the golden setup. Golden setup just means everything's lined up. We give it a nice, cute little name like that so you can remember. This video is probably going to be the best video you can watch that we have that covers everything in one tiny little spot. This video right here will go over all of our calcs in one spot. So this is golden setup. You have rational markets, you have VIX and decay, VIX below triple B to keep it usual. You have resilience greater than zero. You have a bullish setup on the S&P, a bearish setup on VIX, and no irrational signs. All your doomsday bands are inside. You have no excursion on the VIX, no index catalyst. You can go to our Discord. Our Discord has all of the rules set in there, and inside of the strategy guide section, you can go and see all of our rules there. So no hedge pusher breaks. QQQ would be the exception there. But what we like to look for is hedge pusher breaks on the S&P itself. QQQ about to squeeze positive on monthly gamma, so it's looking hella sharp today. Here we have a Black Friday setup today. Not really that high volume, not really that volatile. So once it picks a direction, it's probably just going to go. Yeah, crowd's looking good pre-earnings. I agree. What is specifically what does Bookmap do? I see what it looks like, and it looks like there's like clusters or a 3D image of like a sphere or something. Does it represent volume at each price, like a very sophisticated way of showing volume at price, or a way of showing volume that's traded, I guess, at a price? Or is it looking at how much is in the level 2? I haven't really explored it, but I see it and it looks like some kind of volume aggregation tool. What's up, party people? What's up, New Age? How you doing, man? My brosif, how have you been? Orders at orders at price. Okay, there's order flow at price. That's kind of cool. So like a real-time liquidity as it's popping through. Super cool. It just aggregates the order flow at every price, and that's what those are. So like high order flow. So it'd be kind of cool to see what bookmap would look like next to hedge pressure. So if you're like at hedge pressure, you know, as you touch these things, the order flow comes through. So if that's the case, then the difference mainly, you know, we have levels that will show high order flow, and then those should confirm that high order flow when you get to them here. That's pretty cool. Rocket Scooter plus Spot Gamma together. Ooh. That'd be an interesting... Yeah, that would be. Having the levels before they happen is a great add-on to anyone else's tools. Like, I say some of the best synergies out there. With Bookmap or with Black Box Stocks or Spot Gamma, we synergize very well because we have something that none of them have. So as a pair, I always think that if you know levels to look for and you get to them, and all the other software is like, this is your unusual flow or this is your high order flow, it's good to be prepared, because on the fly, you're not like, okay, there's a signal. What now? What do I do? Now it's like, well, if I get that order flow there, and that's that long signal I wanted, boom. And then when you're waiting, you get the signal, you're already prepared. So this is, you can prepare way ahead of time, because the trade plans are the trade plans that you make no matter what you get, and you can react to either getting the order flow or the lack of the order flow. I like that. How much is liquidity is soaked at each level? Kind of cool. Yeah, so those are good. Those are good. I mean, that's what I love about these modern tools. They're all looking at the right stuff. All these other quote unquote algorithms are still stuck in like the 80s and 70s, like technical analysis world. And so people that are looking into like order flow, looking into unusual flow, liquidity analysis, this is the future of algorithmic trading. Not even considering that other stuff like truly algorithmic. I mean, algorithm is a machine that decides things, human decision making, computer decision making. Right? Mimicking that would be algorithmic. A lot of times it's just a series of concoction of technical analysis indicators that has no smart, so it's not a smart indicator. It doesn't make a decision. It just shows mathematical outputs. So to me, the idea that there's new technology out there, that especially people that are competitors that are making sophisticated modern tools, makes me happy, because I love a good space race. I do. And I'm always happy to meet people to come from those places to learn how, you know, it inspires me to drive harder. Absolutely. So make sure you guys watch that golden setup video, because it goes over all the things that make this quote unquote signal golden. The golden just means everything lines up and it's clean. In the video, it goes through that. You're going to want to see a bearish setup in UVXY, a bullish setup in your S&P. You're going to want to see resilience above zero. It's not necessarily part of golden, but it is confirming that golden could end. So it's good. It's just another steady indicator. The doomsday is greater than 1/2, just showing deviation in the futures market. So when I said today that this was an entry point on NQ, I was not lying. That is an entry point to possibly go to the upper band today. Maybe not. Might be hard today on Black Friday. It's still very possible. You have a decay pattern in the VIX, the VIX below triple B, which is an exploitative contango. Each one of our indicators, if you guys are coming here from somewhere else, one of the neat things you'll notice is that here we have a whole lot of indicators that do different things, different functions. Some of them are swing trading, some of them are day trading. It just depends on what you're doing. Each one of our strats, you have 15 different tools, not just volume aggregators, but each one of these is measured from a different thing and shows you something different. Right now, inside the doomsday band in a rational market, if that number is less than half, you want to touch the upper band at least once, below half the lower band. So this is one of those very few times that this, and we're using in Thinkorswim because it's about to be in the platform, but the indicator I have is just marking it here, is that anytime you're inside of these green bands and that number is greater than half, it wants to go to the upper band. The sign of a possible breakout. So that's good for that. Liking that. It's all of these have videos on them on our YouTube channel. Feel free to check them out. They all exploit a mechanical part of the market. So that's where we stand out too with some of these, is that it's not just a specific technique, it's a bunch of them. They're all exploiting different things. The risk interval is exploiting margin requirements in futures. You would have never thought you'd be looking at those two things together when trading the SPY or trading Apple stock. The risk interval is a huge exploit of the allowed deviation the futures will normally or naturally take from the actual underlying price. So we exploit it. Gamma squeezes, contango and the VIX, we look at that, all kinds of stuff. Each one of these things does something different. So today on the golden setup, we're looking for, like I say, a bull setup in the S&P, a bear setup in VIX. Looking like your view below triple B. Rational market across the board. We are, addition to that, resilience is positive, which looks like the S&P will fill the gap to the upside. That's a gap fill predictor. We have, we're above MHP, which is bull structure, which is bullish gamma hedging for the month. We are now pushing outside the redistribution zone on SPY, which is even better. I mean, everything's lining up. And those aren't golden, but like golden's lining up plus additional stuff. So golden means that the market's going to have nice, rock solid pivots. The market is SPY. You're going to tap something and go. You're going to hit something and move. You're not going to have overshoots. You're going to have volatility, nothing. Once it goes, and it's just going to keep going unless something counter pressure comes. Resilience is becoming even higher highs as other stocks are filling their gaps and trading higher. So until resilience is less than 0, this guy is nice and stable to the upside. The gap fill predictor is showing that resilience is greater than 0. The S&P is trading down. We knew it wasn't going to go any lower than here, and so it pops up to fill the gap just like you expect with res greater than 0. White is a gap fill predictor, so SPY filled its gap. That scalp. Should you buy SPY puts or QQQ puts? I shouldn't. I should first tell you, I can't give you investment advice on what you can or can't buy. Being a random nobody from the internet, don't trust people with your investment decisions. Number one, on top of the regulatory side of that. If you're bearish those things, then you buy puts those things. That's your decision to make. You and you spent how much of liquidity is, I'm reading what shit SPY Gamma is thinking back in the 90s. They're awesome, but need to, I'm reading comments. This isn't my commentary. They're awesome, but need to systemize all that info that's provided. You simplified all of it. I remember talking to the guy one day. I reached out to him because somebody was like somebody told me that somebody was plagiarizing his stuff somewhere. And so I reached out, I was like, hey, you know, somebody is saying that this guy's posting stuff and it's your stuff and I've never seen your stuff before. But you know, just wanted you to know. And he was like, oh, thanks, you know, good, you appreciate it. Look out, I'll take a look at it. And then just chatted briefly, and then I looked at the website and saw the stuff, and it's very much like in the same let's think of a way to say it. If we're baseball, they're cricket. It's like the same kind of sport, right? It's a ball and it's a bat and you run, and people standing in a field, but it's very different. They are more like a, what do I call it? It's like a heat, like option heat maps, which are really good. Like they'll look at different areas of options. The major difference between us and them, as I could tell on the surface, is I could see some of the stuff that I just barely saw and tell what it is, just because I know what he's doing. I could see behind the veil. A lot of it looked like volume or Greek open interest heat maps of options, essentially like Max Payne theory, but very emphasized and very, very, very much 1,000 times better than that. But not a, the major difference is that we don't use all the options and they look like they do. And that is the major difference between us and everybody. Our algorithm filters the options very heavily based on the algorithm. So every option order that comes through on the ones we talked about this morning is considered in all these technologies. Ours does not. Ours throws out a huge majority sometimes of the options and doesn't consider them valid for the analysis, because we look for only ones we believe that belong to market makers. So if you can do that, that's how I'm able to simplify it and make it more actionable, because market makers net sum of their activity is to drive their risk to zero, which means that's the only consistent part of the stock market, is that market makers will always drive their risk to zero, which means they will always do the same thing on a daily basis together. Whether one guy's longing, one guy's shorting, the sum of their activity is always zero. So we knew to find a consistency in looking at options, that's all I had to do is isolate that from all of it. So you can entry on HG retest and SPY worked out good. Nice. You sold an Elliott. You sold a naked put on SPY previous week. It was an accident. The order got filled and you wanted to buy one, but instead you sold one. Couldn't sleep the weekend. LOL. Oh, well, I mean, if you sold a put, as long as it's out of the money, you're doing good. Or you collect some premium between then and now. You buy Meta for a swing trade. Looks solid to you. Let's look at Meta. Let's look at a couple in Tesla. Yeah, let's look at Tesla as well. All these stocks have such low monthly hedge pressures. Market's nice and stable. Meta, mean reverting, stuck in the middle. So breakout on 112 at this point. I like Meta on once it goes to bull side. Tesla. I got such a headache today. I'm not gonna lie, we're drinking a lot of scotch yesterday at Thanksgiving. It was a very, 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 very pricey bottle, and it's hard to turn down. Oh, here, have another, and I'm like, I'll have another. But anytime I drink scotch or whiskey in abundance, I always wake up with the worst headache possible. Plus, I kept waking up to brine my turkey because I'm cooking today, or to add ice to my turkey while it's brining. So I got like no sleep. What's to drink? Oh, like 10 shots of total of whiskey. You know, essentially like just kept filling you a shot and it's just sipping on it. It was great. I have a headache. Crazy. Ugh, horrible headache. What's up, Brian? Hey, are you gonna come over today? You guys, if y'all live in Houston, come over have some turkey tonight. Friends. Play some board games, have some turkey, chill out for a little bit. Day full market day? I believe so. Tesla's BLD. Today not a full market day? Hold on. Let me double check the internet. Yeah. Today's full market day. Somebody said no. That made me prompt me to go check. It closes at 1 today? Wait, and the NYSE closes at 1? Because the calendar doesn't say that. That's so weird. What's special about today? Unless I'm stupid, what am I not seeing? Is today Black Friday or is today Thursday? I'm like, wait, am I Rumpelstiltskin today? Did I oversleep today? Explain this. It's not on the calendar. Oh, I know it's Black Friday, but I thought Black Friday. I always thought it. I can't see. That's what I'm saying. I can't remember. Let's go golf this afternoon. Yeah, the calendar only shows closures. Yeah. Oh, that would be why. Black Friday is not a holiday. I know. That's what I'm thinking. I'm like, so I guess half day at 1 o'clock. Okay, good to know. I think I knew that. I'm just still hungover and half asleep. Well, I'm leaving in like 15 minutes, so. So it is until 1 p.m. Thanks for letting me know. I'm fired. I'm fired for being the calendar manager. That's for sure. I need to replace me with someone else. Oh, man. That scotch is good, though. Right. Shopify, let's double check. BSU and Shopify. Has volume at monthly hedge pressure if it gets to the yellow. I'm expecting volume and support from here to there. Any break on 36.5 is a run. So just looking at the positional risk today, Shopify is not a terrible looking opportunity, at least from 36 with the tight stop. I like that one too. I don't think I'm doing any trading today, so I'm gonna get out, gotta get ready to go to brunch. Do we, if the market closes early, do the weekly options expire? I believe if the options market and the equities market will also, if the equities market is closed, the options market will also close. I'm curious if it's at 1:15 though instead of 1 o'clock. So in a normal day, 4 o'clock the equities market closes, the equity options close at 4:15. So if your expiration day is today, they will cease trading on today as well. You have a bad feeling we're going to sell off and bounce off a hedge pressure? I think it's good. I like the market. I think it looks really solid. VIX is completely in decay, so I've got no fear of the market selling, period. Me, personally, it may not, if it does, it does, which is good. I mean, even so, follow the hedge is not that far. 401 from 402, 15 points. So is it 1:15? As Russell said, the answer is they will stop trading this. They will expire earlier as well, but I'm not sure if there's another 15-minute grace period like there normally is on in equities markets at 4 p.m. So somebody replied to and also said yes. The free trial. So basically in the free trial, just a couple of videos you can watch that will get you through everything. We have a bunch of indicators and tools. I'm just double checking. One of our major ones, this doomsday band greater than 1/2. This number is showing that there's that desire for this to trade higher. It might not make it all the way because it's a half day, but this is where it wants to go, not below here, with everything looking positive on that. The S&P wants to sustain this in this area. We have bull long up on liquidity map, so you can get your liquidity map out, which is showing where buyers and sellers will be based on hedging and other mechanisms. And in liquidity map, the S&P just opens. Anytime you support over the open, it just wants to go. If you bounce off a hedge pressure, it wants to return to the open. There's a V-shaped trade that's available from here to there. And then this is telling me like we're on the bull side of the market. We are on the long side of weekly options hedging and the upside of monthly gamma hedging. So both of them are just showing where buyers and sellers can be when you touch these hedge pressures. It is guaranteed volume spikes. One thing we do is predict volume before it'll happen when everybody else just shows you where it's happening while it's happening. It's 1:15. Yeah, that's what I thought. Oh, period of smaller range with fixed dropping. Yeah, it's just small ups. Good morning. Can you please review the way to determine monthly map? Any ticker gets confused when using daily radio button. We use a monthly button versus single date. Okay. So one thing is we now have a single date Single date is going to be any date in the box. Monthly date just helps you out if you don't know what the monthly expiration is. That's it. Monthly date is single date that forces the third Friday of the month. Just because people may not know that. Daily is an aggregate of all options that exist with the exception of the monthly. So daily is all weekly options. If it's SPY, it'll be Monday, Wednesday, Friday, Monday, Wednesday, Friday, Monday, Wednesday, Friday, or actually Monday, Tuesday, Wednesday, Thursday, Friday now. Skipping over the monthly option. Monthly is just monthly by itself. So it's just a single date and it's the third Friday is a single date. And then single date won't let me put any date in the box. If I want to look for SPY, like whatever date. Oops. Oh, we don't have the Tuesdays implemented yet. Oh, yeah, we do. It's just too far out. Should have that. Yeah. So it looks like we do have all the Tuesdays and Thursdays also programmed in here now, but you can pick any specific date and look at the split between the bull and bear side on that date. And then you do it for all dates. And now the thing is we're going to have this on a rocket scooter for you. I tend to map it out from Friday to Friday. I tend to not do every single one of them. But when a monthly map comes out, it'll draw it on the chart for you, which shows you that in the monthly map, it looks like this over the course of the month and looks like this. So this is what the month is showing, that it's not bearish until you break through some of these levels. So the market is clearly bullish today. Next Friday, it's even more bullish. Next Friday, it's even more bullish. If people are willing to be bulls at a lower price, then that is a more bullish week than the previous week. So not only is the market showing lower bulls as the weeks go by, but the space between the bull and bear zones get even smaller, so the market's becoming even more liquid. So the collapsing of this, the fatter it is, the more volatile it is. The thinner it is, the less volatile, so more liquid. So the market is becoming more bullish and more liquid over the course of the next 4 weeks. Ain't that good? That's what monthly map tells you. Just go back in Bonnie Tech. You can go back and rewind this and see this. So what I'll talk slower. Okay. So you map out every single day in single date. You can type them in one at a time: Monday, Wednesday, Friday, etc. Just to skip some steps, I just do Friday, Friday, and Friday, and Friday, just to kind of skip some steps. We'll have this in the platform in the month where it does it for you automatically. And so what it's showing you is a couple of things. One of the major takeaways is that you have the bull side of the market right here, bull. And it's showing you what this Friday's expiration is from today's point of view. So if the market's at 400 today, and 400's right on the edge of today's expiring bull side, then if this stays the same over the course of the week and you go here, this week is even more bullish than this week because people are bulls at a much lower price. Like if today people at 390 are like, no way, I'm bearish now. But here next week, 390 is like, no, I'll buy that dip. 380, no, I'll buy that dip. I'll buy that dip. I'll buy that dip. And so there are bulls willing to buy lower in abundance of the bears. So lower bull zone boundary is more bullish and more bullish. So this is more, and this is more, much more. As people are willing to be bulls at a lower price. And you nailed it, Bonnie Tech. It means lower support. That's exactly what it means. You nailed it. So if it's more bullish as the months go by, it means the market can dip. If the market dips here today, it's bearish. But the market dips here today, and then Monday we're there, and this is in the same spot, then it's a low dip to buy for a Monday. So it's right, it supports lower, and that's why it's bullish. You nailed it. So SPY can drop on that week, and that's how you look at it. So if SPY drops today, I'm not buying any dip today. Nothing. This is all bearish today. If SPY dips today, I'm going to let it fall and then circle back on Monday to look for a dip to buy. That's why when everybody says the markets crash, why am I not chasing the short? Well, I mean, clearly next week, 380 or 375 or whatever that is, is support. So if it falls today, I'm just going to let it fall, and I'm gonna hopefully we catch it as support tomorrow. Not every day or Monday we come back and redo the map. And that's how you look at it. Make all kinds of inferences. So if I wanted to buy puts as an example, if I wanted to just do some weekly puts for next week for whatever reason, right? Pretend the market's flat and we open up Monday and it wants to crash, right? Or I say I think it's going to crash and I want to buy puts. Where would I buy puts for Friday? This would be the strike. Because you don't bet that the market hits a bull side and then immediately crashes through that liquidity pocket and then immediately turns bearish. It's 3 big breaks you need, and that's very hard and unlikely. But the best case scenario is that I'd expect the market at best to fall to support and possibly hold, possibly break. Since this leg is in both of those trades, my puts would be somewhere in this range only. Below the call wall, right? So I'd be betting that if we fall to support, I need puts that are somewhere in here, and anything down here is highly unreasonable without a lot of catalyst. So that monthly map is exactly what it shows. I mean, it is an options trade planner. It circles far out into the future. And so it's the best you can do, and it's using all of our technology, but not only is it doing bull and bear split today, but it's projecting bull and bear split in the future as well. And you can just draw it like that. There you go. So that is called monthly map, and that's one of the new features that will be coming out very soon. Another invention of ours that'll be the next setup. You could just click monthly map like here, like maps, liquidity map. You could do monthly map, click it, and it would just pop it up automatically on like your daily chart. Yeah, better to be close to the money with the target at the bottom of the call wall or somewhere in there. And the idea is that you're not going to buy puts down at like 300 or way down in that bear area because you're not there. If you're on the bull side, you're not betting that you break to the bear side. And it's very rare that it happens, and it takes a big catalyst to shift all of Wall Street from bull to bear. It doesn't just randomly happen on one trading day. You need everybody to abandon their positions. So you need news to come out, catalysts to come out, hedge pressures to break, something to trigger that. So when you're betting, you don't bet that that small probability happens. Even though it can happen, you can have a random lotto day here and there, but you don't bet on it. So when you don't plan on it. So I'll buy my puts at the edge of that boundary, or if I'm bullish, I'll wait for it to fall and start loading up on calls before it gets to that boundary, and then close them if we break it. So that's basically it for monthly map. It's a way to plan where you buy and when you buy and what expiration you buy. So the only tool in the world that has that as well. How do I do all my swing trades all straight up on monthly maps? Ow. This headache is driving me crazy. Okay. Might have to bail in a moment. Get ready for brunch. I'm still gonna be here. Hang tight. Well, let's see. It's 10 o'clock. Everybody, to do me a favor, go to the Rocket Scooter website, rocketscooter.com. The cool, cute name is a nod to our engineering background as we take your basic child's toy, which is your charts filled with colorful indicators, shapes, colors, numbers, zoo animals, whatever. And we grab our duct tape and our WD-40, we engineer it by throwing a rocket on the back of it. And take your little scooter and send it out in space. Oh yeah, oh yeah, 2 more likes. You want to see my scanner settings? Let's go. You nailed it. Tommy, been paying attention. I love you, Tommy. All right, give me 1 second. I'm gonna get me a drink and we'll come back. I had a hidden Celsius down here. Oh, this is exactly what Daddy needed. But this is the disgusting flavor that I don't like. This is the mango passion fruit. Now, not to knock it, if you like mango or passion fruit, you would love the Celsius because it tastes very, very thick, like both of them. And I'm not a big fan of either of them. I bought it because Nicole likes mango, but she hates passion fruit. So when it comes to tropical fruits, it only takes one that you don't like to make you not like all. It's like you can't mix them all together. Like Skittles, you can mix grape, lime, orange, and it all tastes great. But tropical fruits, if you don't like one of them, you will taste that one in the mix and hate it. She's like, I can taste the mango, but bleh, passion fruit, and she hated it. So now I had all these Celsius that nobody wanted to drink. Now I've been drinking them, and it's like, bleh, I hate both of them. So I'll take a sip, but I definitely need one because I'm very hungover right now. It's my girlfriend's Thanksgiving yesterday. Vietnamese family Thanksgiving. The rule is when you're offered a drink, you drink. When the bottle is held above your mouth and being poured in your mouth, you drink till they stop pouring. They love to have fun on Thanksgiving. So we were drinking some really, really nice scotch. Somebody busted out a special bottle they had for the event. And I was sipping on it. We weren't drinking from the bottle or anything. We were just sipping, but I did drink a lot. And anytime I drink barrel-aged drinks, anything, whiskeys or whatever, I always get a headache, man. Next day, whew, it was very tasty. I forgot what the name of the bottle was, but it was very good. I'm talking like this was sweet like honey. It was scotch, and scotch is usually very like peaty, very like grassy tasting, right? This scotch was sweet for a single malt, like hella sweet. I'm talking almost like drinking syrup. It was tasty. Mango ruined tropical fruits for you. I know, right? Some tahini. Oh, I love tahini. We got tahini on our margaritas, dude. Super good. Well, that's a tight. You're from Texas though. You get it. It's a Texas thing. Y'all ever have your Mexican margaritas? Ooh, put that spice on the edge. Oh, that's some tasty stuff. Like sour chili powder. Big fan. Japanese whiskeys are nice. I agree. I love Japanese whiskeys. Okay. Scanner settings. Okay. Here's the trick. I have a little sip of this and wake up. Today, the parents are meeting the first time. Her mom and my mom are going to meet. We're going to all go to brunch. Go have some. And then tonight, we're going to be having our own Thanksgiving. I have a SPY target of 403 for today based on low IV of call options. There's a way for Rockscrew to confirm today's 403. Well, in your picking price targets video that we have, that will go through. Picking price targets will actually show you let me see if I can't that video for you. The two videos I want you guys to watch today. I made this for y'all yesterday. This is the golden setup, what we're dealing with today. This actually has a description and summary of all of our strategies like in one place. But a golden setup shows how they all line up. When everything lines up, you have, non-choppy signals. Market's really great. It's easy to, it's not going to be choppy. It's not going to be flat. It's going to pick somewhere. It's going to go somewhere. And it's going to do what you think it's going to do more often than it won't. Picking price targets. This is the next video that will show you to when you say, can Rockscrew confirm how you pick your targets? And this is how I do it. And here. So you said you had a 403 target. So the four things I do is I come here to the walls tab and I will go SPY, right? Whenever you're looking at SPY, hit enter. I will do monthly and look for monthly resistance. So as you see, SPY's trading at 402.5. There is no resistance at all on the monthly option side. So looking at the monthly side, there is no resistance. That's good. The next thing I do is I look for gap fills, and I marked mine on Thinkorswim already. So SPY is a gap fill at 406.49. So of the upside target, your target is in the way of SPY's desired trajectory to fill the gap if it continues to stay bullish. As long as they're bullish, the only bear resistance we have is this gap fill. And we can double check yellow lines and red lines. This is the last part of that video. Let's actually do that. I'm gonna draw it here as well. Yes, really quick. Do I trade in crypto? I don't. I've never actually owned crypto one single time in my entire life. I'm one of the few people that's not once ever traded or held crypto. Nothing personal against it. I just don't think it's I think a good thing to trade. I think it's a great thing to invest in if you believe in crypto. Not telling you to believe in crypto though. Let me double check my yellow line distance here. We'll go to our bot in our Discord. We have bots to give you these numbers. Yellow line's number today is, or this week is 230.75. I'm just going to double check. I don't invest in it because I don't believe in crypto. But if you believe in crypto and you want to invest in it, that's one thing. But as far as a day trading instrument, it's just not liquid enough. I mean, it's liquid-ish, but it goes through these just periods of illiquidity, and like it's almost like a commodity, right? Single point catalyst. There's not really well understood the trading mechanics behind it. It doesn't do any of the fundamental things people claim that it does, like hedge against inflation. So in reality, it's just like a penny stock, to be honest. It's a company that has promise. It's, you know, it's a penny stock company that has promise. They don't have a lot of use. Not a lot of people use it. There's an enthusiastic group of people that trade it. It has promise for the future, technology that is there or not there yet, and adoption necessity that hasn't been implemented yet. So people have not adopted it fully to use it. So I'm like, okay, it reminds me of a 2000s .com stock. Like, we need this high-speed internet. You can order stuff online, yada, yada. Internet's the future. And then all of a sudden it crashed before it found its ground. I feel crypto's the same way. So all its utility that it has is something that's supposed to come in the future. So it's kind of like investing in Amazon like in 1998. And in 2022, you're probably glad you did that. But in and this is like in 20 years, you might be glad you bought some crypto, but invested, right? Maybe not day trading. Day trading, I want something to be liquid, high volume, not that easily manipulated. And crypto just can be manipulated so easily. And that's kind of why I don't day trade it, just because anything that has a lot of randomness to it is something that I don't want to be part of my trading diet, right? So I don't trade gold or natural gas. Like, single commodities have so many different factors than just the entire stock market's more resilient and robust. It takes a lot more to shift 500 companies lower than it does, like the Crown Prince could tweet something about oil and oil could collapse in a minute, right? So you can't really, you have more ideas, more opportunities for catalysts and things like that. So let me double check this yellow line. But no, I don't have crypto for those reasons. I sound like a shark in Shark Tank. For those reasons, I'm out. 230.75. Is it 230? It's not. Let's update this. 700. 39, 30, 75. So what I do is I draw a box, right? It's this distance. And this box right here is going to mark off where my yellow lines are. Let's go back in time. I know I should have marked that one. We had that risk interval lesson on anchor points, so that's still there. I won't mark over that because we'll use that for an educational session. Let me make sure I'm right on the edge there, though. Hey, Cruz, what did you do for Thanksgiving? Did y'all do? You and your family do anything, Cruz, brother? The music stop? Well, that's back to this no copyright EDM music. Generic streamer stuff. Not bad though, some of it's good. Probably scare you off if I start putting on some death metal though. Okay, so this is actually no longer there. Still December contract. Let's put this here. Looks like we've created a yellow line over here as well. So let's go ahead and look at that. So these are the options. So this one, these are all been broken through, so these are no longer applicable. So delete the ones that we have broken through anchor points on. So just keep like a history of them, just so we can see where those places to go are. We are. This one and this one is still active. This one is still active. One. This one is not active anymore. This one is also not active. I wonder why I never deleted those earlier. So it's open anchor points, right? So what I'm going to do is I'm going to show you where upper targets can be. And I don't know why this is floating. Maybe I just... Oh, you know why I was moving things around for that video? Oh, that's right. I put them back on there to demonstrate when we made the video. Okay, we have to actually have this video going to come out. So I'm going to release some of these videos this week. This weekend I'm making them. So I have them already filmed. We're just going to edit them. I started my computer build, so I started doing the filming of that. It's really, really cool filming a computer build video. I will have a very, very, very cool montage build video of the computer I'm making. Somewhere in here is likely an anchor point. Let's go here and zoom in to these days. I have to estimate this because I didn't do it. That's actually really solid. This one is right here. There's no run length, but as you can see, the run length has been pulled back. Please speak slowly. It's uncomfortable to hear you in this accent. Oh, I apologize. In my accent or just the translation? I think I remember you from last week. Are you from YT? Are you from India? If I remember correctly. I think you came on last week and you're like, greetings from India. If I'm speaking too fast, I'll try to slow down. I apologize for that. I'm from Texas, so I do have also a twangy American accent where I sometimes get lazy when I talk, and it sounds sometimes, yeah, hard to understand my dialect. This is what's called an anchor point red line. Anchor point and impact red line. Sorry, combination. Normally you do them in real time when they form, but I didn't do this one at that time. We're going to likely have one more over here. These are projecting upper targets. Market's nice and bullish today. It's not going to sell off. Anybody here? Let's say, give me some hands up in chat. Anybody here short the market today? Anybody here long the market today? If not in trading, you would definitely be in Hollywood with my voice. Well, shucks. Should I be like, what would I do though? You're never gonna catch me alive. What does B say? You're gonna catch me alive, cappas. I sound like one of those 1920s Hollywood guys. Like maybe like old gangster movies from the 20s. See here. Always love those. Katharine Hepburn accent. Marvelous dance. I'd love to go for a dance today. You're long MES. Is fixing still part of Alexa, dude? We fixing everything. Always is. Just had some nostalgia with my grandparents. Is you're fixing to do something. So Texas thing. Watch out. Keep an eye on the VIX today. Looks like VX is starting to move a little bit. Texas say fixin'. We're mostly an ain't state. We say ain't a lot. Fixin' is like like if you're about to do something, you're fixing to do it. Never know if y'all don't say that elsewhere outside of Texas. It's hilarious where it has no physical meaning. Fixing something means repairing it, right? Like, you gonna get up? Gonna go mow the yard? Dad, I'm fixing to. That's my cousin. My cousins and my dad's side of the family are all from the Louisiana-Texas border. That is, in my definition, the countryest accent in all of the United States. It's more country than the Georgia accent that just sounds so lovely, marvelous when you say it. Right? That's like the Georgia Southern, right? Then you get the Texas accent that's just like, hey, how bless your heart, how you doing today? Right? But then you get on the border and it's just like so thick. My cousins, I see them like at funerals or weddings or whatever, and they're just, uncle's like, how you doing, Matthew? It's been so long since I've seen you. I'm just like super tight. That's like the Texas accent that you hear in like overdone in movies, is like right there on the border, Texas, Louisiana. I have like a French Cajun background. You're from Sean, you're from Houston? Friend of yours says, I seen it. Seen it, yeah, that's one of those things. I've like, if you've seen something, you've seen it. So you make it like past tense, and it's hilarious. Okay, I'm drawing right now. I'm just kind of like rapping while we're trying to find smaker points. Sidik Muar has a headache emoji. What is this? What is this? Is day trading. This is Thinkorswim, or what is this accent? It's a Texas accent. Looks like we're here. Okay. And I'll check this really quick. I'm projecting targets in the future of the S&P. Yes, sir. Shocker. Yeah, we say that all the time too. Ain't or y'all. One of the things that we say a lot is y'all, which means you all. And also in Texas, it's very weird how we do this, but we say you all means all of you, right? It's like it's a funny way to say all of you. So, for instance, are all of you going to go to the store later? We say, are y'all going to the store later? Now, you all doesn't need you in front of it. So all means all, right? All means all of a set. Like you look at a bunch of people and you say y'all. So it means you. It's funny how this works. You all, and it really just all, right? Are you going to the store? So in English, you can just say, are you going to the store? And you can represent a group of people, right? But we say all y'all, or we say y'all, which is you all going. But then to make it even worse, the country you get in my state, you say all y'all, which is even weirder because you're going, are all y'all into that? Are all y'all gonna do that? And we say that more than we say y'all. All y'all, even more confusing. Are all you all going to do that thing? So not only is it the whole group, and you're pointing to the group and saying you all, but then we say all you all. It's so weird. Who's all over there? Y'all fixing to go? All y'all fixing to go? Yeah, there you go. That's exactly right, right? Right? All y'all fixing to go? And then people just like, I'm like, this. Oh, so we are in Texas. We just don't. We don't care. So this projection right here, these two projections, these yellow lines are the upper targets. Just a spark of thing. I usually do this off the stream, but we're just gonna do this while we're hanging out here, waiting. These are my upper breakout targets on the S&P. So 41, 46, 42, 16 if it keeps going. So when you do that upper target, when somebody said, what's your upper target on SPY? There's three things we do. Number one is you look for gap fills. So I'm going to go back to the SPY itself and show you how this works. Gap fill. These are your targets on the upper side. So for SPY upper targets today, and we have a video called Picking Price Targets. I find the first resistance for every day trade. So 406.50, give or take, 406.49 is a gap fill. Then I go to monthly mode and I look for options resistances. There are none in this vicinity. So that's the high target, 406.50. Then I do this technique called red line and yellow line. And what this does, it helps me forecast upper targets in futures. And again, I have an old red line sitting there at 405.5, and then I have some yellow lines projecting further. So today, 405.5 is a target. That's the first target. The next one is that gap fill at, what was it, 406.5. So there's no resistance, at least for probably another 20 points. That's super good. Everybody head to rocketscooter.com. I want you guys to check out check out the free trial. There's no credit card required. We'll train you guys a special training today. Get some videos coming out. You don't do trading, Siddiq, but you come to watch me live. Dude, I love it, man. Thank you so much. Appreciate you. Whereabouts are you from? Whereabouts? It's another Texas thing. Whereabouts are you from? I keep remembering I sound Texan. So where are you from? Whereabouts is Texas lingo again. Kid from Tennessee in the Army said Ewans. Really, Beavis? I didn't know. So like Ewans would be like, you folks or you guys, Ewans. Yeah. I think everything's bigger in text, including subject conjugations. Alan with the grammar jokes. I love it. Do you call out alerts in this live video in Discord or just educational session? I will do, when I do my day trades, I will call out what I'm doing. Absolutely. In the Discord right now, it's just educational. Today's Black Friday, but in our Discord, yeah. Starting next week, we'll be doing a different format of the show. So it'll be my day trades, my live trades. I'll be doing a little bit of futures, a little bit of stocks, a little bit of options, everything. And then, of course, posting my plays in our Discord. Absolutely. Okay. Ewans, y'all say that in Mississippi? Wait, Ollie, Ollie from Mississippi, dude? And all my southern friends down here, love it. Whew. You don't get nicer people than down in the South of the United States. Mississippi, people are awesome. Alabama, Louisiana, Texas, you were all so nice down here. Lovely area of town. That's why everybody's moving here. Texas, they realize how awesome Texas is. They love us so much. Yeah, PLB. So an example, I'm doing my scanner settings now. You guys ready? Scanner settings. Let's go. You know that show Hometown at HG? That's the city you're from? Oh, really? What town is that? Tommy is asking a question. Which broker would you use for a small futures count? Trade-of-8 I like more than anything. Trade-of-8 is probably the best. Now, again, I can't recommend, financial advice for you. So recommending a broker, I still believe constitutes as that. But the reasons I like Tradeovate personally is the commission structure is the cheapest for what you get. So ideally, like they're cheap in general as far as commissions goes, but you also don't have any sacrifices that come with that. Like there's no mega data outages. The app's not slow. The app's actually, to me, in my opinion, the best mobile trading app on the planet for any type of trading. It is just smooth and flawless and engineered to be simple. It's not glossy. It's not overhyped with features and overdone or bloated. It's just to the point as a futures trader, and it's all you need is to have the chart and a place you can order on one spot without a bunch of confirmation windows or hiccups. It's a very simple platform, but as a trader, you're looking for speed, right? You're looking to get in, get out when you need to, no hiccups, no extra things. And the second thing is they have a reporting feature that shows your history and your performance that is unlike any other broker. Thinkorswim, for instance, their reporting feature is god awful for a platform for this decade. It's still stuck in the 2000s, right? When they developed it. So it doesn't show you like how you did, your performance rating, your win rates, all that. Tradeovate gives you an amazing report. So the fact is you can study your stats. There's a low commission structure. And then of course the data feeds are nice and solid. The app isn't buggy or slow. I mean, it's all the things you want as a trader and cheap on top of that. So it's like it wins in all categories. Ranks high in all categories. And there's not another brokerage that I think their software is anywhere close. Now, I know they merged with Tradeovate, NinjaTrader. Like the other softwares, like NinjaTrader, for instance, is just garbage. Like NinjaTrader 7 was great when it came out. NinjaTrader 8 is just like embarrassing. And so hopefully NinjaTrader just completely abandons that platform and just uses Tradeovate stuff as they grow, because like modern futures, there's really not that many good modern futures brokers. On the stock side, like I like Webull and Robinhood, like those are really good apps as well. And of course, Rocket Scooter, right? You'll be able to trade through ours the next maybe quarter. Do y'all trade? Look at all these Texans in here now starting to say y'all again. Seems like I'm running the market. You're pretty sweet. Did you show your NQ target again, Brian? Yeah. Oh, yeah. Okay. Sorry, boy. Let's go. QQQ. So on a monthly hedge break on QQQ, let's run an upper target here to see if I can find any resistances. Again, there are none above 287, is at least on the option side. And remember, we do have a half day because of Black Friday. So we do QQQ for gap fills. So the first thing you do is you go to monthly walls and you look for any kind of market maker option wall that's resistance and put side. You see there were none, right? So now on QQQ, let's go through and look at some gap fills to the upside. I have marked some of them already. Again, there are no gap fills until 310, right? Which is my strike price from my options that I bought. Checking the group text here. What complaints I have with NinjaTrader? It is buggy, slow, limited. I mean, it's just like the part that made NinjaTrader great when it started was you had flexibility as a content creator. Like if I wanted to make indicators, right? I can make them in NinjaTrader and sell them through NinjaTrader. Had like this ecosystem where you could sell your tools. Like gurus aplenty spawned up in that environment, selling technical analysis. The problem was that it's a very old, the way it's programmed is not really sophisticated to work. People that use it, even this to this day, are constantly having to like uninstall it, reinstall it, update it. Anytime people would like sell tools or anything for it, you're always having to fidget with the settings to get it to work. It doesn't really work well with a lot of people's computers. It's just like an enthusiast platform. And the time when it came out was great. Like there was nothing like it. you can create your own code, and there was a virtualization portion where you can actually, obfuscate the code and give it to people. And they couldn't see the source code, but you can sell them like almost like, I could put like if I could do hedge pressure in that, I can make it, compact it up, and give it to you, and now I can sell you a tool without having to build a platform, right? So that made it popular, but the problem is a lot of times it doesn't handle resources well, and it just would just get laggy and slow and buggy, and just looks old, right? A lot of the platforms look old. Like Thinkorswim looks old. It's starting to date very well. Thinkorswim is completely god awful too. I loved Thinkorswim 20 years ago. It was great. But I ranked Thinkorswim and NinjaTrader in the, it's time to take them out to the woodshed category, because you need some modern, modern applications, like programmed for like web-based, for instance, multi-threaded processing, right? You're using a lot of CPU power for these things. So you're looking at buying a license, and not to say that it's bad, Red Knight, for what you want it for, but the complaints people have about the software is just that, like, it doesn't run well on my computer, it locks up, it freezes up, they constantly have to uninstall and reinstall it. If you bought indicators on it, you're constantly having to patch them or upgrade them. Or not you, but if the person that wrote the code, it's just you're always doing. It's not like an Apple product you buy outside the box. It's an enthusiast product, and so you have to be very tech savvy and computer savvy, and if you have to like doing that, you want that headache to get that extra benefit, then it's yours. It's a great idea. So it's like an enthusiast environment for like people like us, like people that want to make stuff and create stuff and share it with each other. It's that kind of environment that you have to know what you're getting into. Does that make sense? What's my go-to regular indicators? So I don't use any technical indicators anymore. We created a new method that doesn't use any of them. So what we actually look for is liquidity map. Is our technology looks at where options held by market makers are, and we will use that to look for buyers and sellers. So anytime I know where buyers and sellers can be, I'm going to pivot off of it, and I use this little guidebook right here to show me where buyers and sellers can be to match these letters. BLD. I come down to here, and this is available in our Discord for free. You guys can go grab that. Discord link is in the description, so scroll down and grab that really quick. Where am I from? Houston, Texas. The BLD shows me that I have selling pressure from hedge pressure and buying pressure from the blue hedge pressure. So between the yellow and blue, there's that kind of scalpy range, and you see that scalpy range is drawn just like this, just like this. It's like using scanner. Okay, scanner settings. All right. So, I have to tell you, badass scanner settings. You guys ready for this? So, when using futures, when using rocket scanner futures, okay. So, for instance, SPY, S&P. So, I use the ETF. With Rocket Scooter, the trick is you use a share settled instrument. Like futures, an example, I would use an ETF to get the risk. So you're looking at where options are that settle in shares, right? As market makers are dealing in shares. So for the SPY, market opens here right at the start of the day. So this is how I analyze it, okay? And then I'll do my scanner settings after this because somebody keeps asking questions here. So market opens here at this spot at 9:30 in the morning, and our calculation comes out a couple of minutes later, and you see that monthly hedge pressure is like way down here at 370, which is great. And you have hedge pressure at 401. So let me just zoom in, since I want to make sure you can see the candles to go with it. I'll just kind of draw a little orange line that says 370. Okay. So that way you know it's like way down here. So what you see at the top is liquidity map. Liquidity map is a series of 3 letters or 3 designations. B or BR is bull or bear. Little r is bear. Big B or big B and little r, bull bear. What it shows is that I'm on the bullish side of the distribution of options. Essentially, I'm on the bull side of the market. That's the first eye-opening thing that people go, holy crap, that's really cool. So let me put SPY down here, and this is just going to draw the walls in a more condensed form. We go to daily mode, and I run my daily options. You can see that 400 and higher is bull side of the market. 399 and lower is bear side of the market. Okay. So this is to answer your question, the Hawk. And like I said, go grab the free trial and you can actually play with it and try it out while you're here and go through the same stuff. So what we look for is being on the bull side of the market, which means these are already established positions held by independent traders. So example is if I bought a lot of SPY at 400, maybe yesterday or the day before, and I just loaded up and there was no seller. Like I'm the only buyer, right? I bought a whole lot of it and there was no seller on the other side except for a market maker, right, at that level. Market maker is short against me as I'm longing. You always have to have a seller and a buyer. Market maker doesn't want to be short. They want to be neutral. So they're going to short to me, but buy calls to neutralize their short. So they're short with a call and I'm long the market, right? So I'm long against a balanced trader. These are market maker options distributions. So this is where the market makers have shorted to actual bulls, where there was no bear. So this is bulls where there are no bears and bears where there are no bulls. So anything above 400 is all bull position. So it says that's a B. And there's a 96% probability that when you open on the bull side, you close on the bull side, and that's back tested. So what we say is that Wall Street is bullish. It will likely stay bullish without a counter reason to go bearish, like a catalyst. That's it. Hedge pressure is the net maximum order flow you'll see from market makers that sold those options to the first market makers. You have 3 traders now, hedging their risk of those options being in and out of the money. So this is the gamma balance or peak gamma of all options sold to market makers. Hedge pressure is the highest order flow of hedging. When you touch this blue line, you will see a volume spike every time for every stock. It is guaranteed. Now, will it be bullish or bearish? You don't know, but I know if the market was opening and trading down and I wanted to buy the dip, this is the most likely spot to get volume to support me. So now I have bull side of the market and long side of hedging. So if I'm on 401 or higher, there's just more long orders than short orders due to hedging. It's just that isolated pressure. So if nobody was trading with any logic and just the machines were trading to hedge, anywhere above hedge pressure is a net order flow that's greater on the long side than there is the short side. So it's just basically like a seesaw with a slightly bullish tilt, right? So bull side at 400, long side of hedging. So you have 2 different things that are bullish. You have people long the market from a previous day, and you have people longing the market today hedging, right? So the last thing is up. And what up is just the relationship between weekly options and monthly options. If you have weekly options at a higher spot than monthly, it's just up. It's an additional pressure. We just gave the letter for up. So essentially, the shorter term hedging is balanced higher than longer term hedging. It's again more bullish. The sentiment is more bullish today. The gamma balance is higher today than it is over the course of the month. So shorter term hedging is now pushing a little higher. So the 3 letters together, bull, long, and up, as you see, is a very strong bull setup. All 3 are bullish. Sometimes you get bull, long, and down, which is bullish and slightly kind of choppy here. The other side of the coin is bear, short, and down. All things are down. And then sometimes you get mixed signals like bear and long. Like bear and long, how does that work? Well, bear side of the market, long side of hedging is a sandwich play in the middle, right? So it's kind of like looking at different forces from different sides. Obviously, an engineer's thought process is let's find each thing that's consistent in the market and then find the overall sum and the balance of it all. So that's how that works, right? So how would I use it trading futures? It's the same thing. So you can convert this to futures. When we have futures on the chart, you'll be able to just draw it straight up on futures. You can have a long bounce from 401, which should be whatever it is in S&P futures, right? Close to whatever you can convert it to. And so essentially I would watch SPY, and if I wanted to buy the dip on S&P futures, the minute SPY hits the levels I want, I would buy the dip. Now we put all of our indicators together. So when you wake up in the morning, there's a bunch of them. One of the ones you'll get is the Doomsday Band and Risk Interval, which is a futures thing. Anytime you open inside of this green band and it updates a margin requirements update, it's a CME hack. There's a number at the top of the platform, DD, that tells me I want the market to pivot higher or pivot lower. For the market inside of this band to pivot to touch one of the bands as one of the trading tools I use. So first and foremost, at the S&P, this Doomsday was the name we gave it, being 0.82, it has a higher probability of wanting to go higher than lower, all things being considered. So that's one thing to know. Number two is S&P resilience, which is this line right here. This is an arbitrage indicator that goes from the value of the S&P index to the value of the stocks, and what's called the redistribution zone. And this happens with equities, but futures will pivot at the same time stocks will pivot. I mean, as futures will pivot at the same time SPY will pivot. So anytime you're below half gap is the halfway point between the open and close every day. Anytime you are between the open and close, whether you gap down or gap up, anytime you're in the middle, it's called a redistribution zone. So in the redistribution zone between yesterday's close and today's open is resilience will guide you as to which way it's going to pivot. So if this resilience number is above zero, the white level, which is above zero all morning, being below a half gap, it's going to be above as support. So that's already an indicator as well. Resilience by itself is worth the Rocket Scooter subscription. Just this one indicator is a gap fill predictor on SPY. So if resilience is greater than zero, what it means is you have close was there. Actually, no, close was here and open was here. Okay. We opened here at 9:30. We closed there yesterday. So this is the redistribution zone. Anytime inside of here, if resilience is positive, it wants to find sellers at the top right there. If resilience is greater than zero. Resilience is greater than zero and you're trading way down here. A great sign that it's going to pop up and fill the gap. Like you have a day trade. You see that scalp right there? Futures traders scalp resilience all day long when you get those signs. The hawk, do you see that? So this is arbitrage between the stocks at the same behavior. Anytime you gap down or gap up in all the stocks, we look at the rate of implied hedging from all the stocks. If you're at the halfway point and tilting higher and markets raising prices, then it's going to look for sellers. And the last big bulk of sellers is always going to be the closing print, right? Actually, sorry, I'm looking at the wrong spot right here. So this is where the market closed, right here. So this big burst of sellers, that sell imbalance, it gapped us down. Obviously, price is raising. It's looking for sellers. Well, you're always going to pivot between open and close to look for buyers and sellers. So open and close are always very large volume pivots. And that's just kind of like trading 101. You can see right here, that's the close price from yesterday. Wherever, I don't know where it is, wherever I circled. So wherever this line is, yeah, right here. So half gap is like the halfway point between open and close. So anytime you're in this redistribution zone, you can scalp between open and close based on resilience. If resilience is positive, I'm buying every dip to tap that line. Anywhere in here, I'm buying that dip to tap that line as long as that white line is above zero. Pretty cool, right? So that is a futures trading scalping thing all day long. So in the redistribution zone, I always want to scalp. So here, and so the next step is, and if you exit that redistribution zone where there's large volume support, say that we fall like way down inside of here and we bounce like that, and resilience is still positive, then outside the redistribution zone, which is above yesterday's close or below yesterday's open, so redistribution zone. This is illiquid. This is liquid, right? You have a huge batch of sellers here and a huge batch of buyers there. Sellers, buyers, liquid in the middle, right? Very illiquid outside of it. So say that we collapse here and bounce outside the zone and resilience is still positive. Outside the zone, then it's the open price that is your resistance. And it can burst back in and jump above, but your R&R just plans to trade that it wants to at least test the zone. Now, the other rule of thumb is if resilience is above 0, it eventually wants to be above half gap as support while you're in the zone. So in this range right here, the rule is if half gap is, or resilience is greater than 0, then half gap is support, which you see very clearly right there and very clearly right there again. Resilience alone is one of the best things as a index trader, especially futures. I mean, it was created for scalping and helping you decide which way the S&P is going to pivot and be a tiebreaker. See, right now, see res is testing. If this number stays above 0, then this stays support. You can almost draw a line. Like anytime this white line is greater than 0, you can just draw an arrow from that half gap. So greater than 0, it's support, it's support, it's support all morning. If this line goes below 0, then that becomes resistance. And again, the pivot is to the next buying and selling imbalance. So you're talking inside the redistribution zone. You're looking for the open and close. So when you're outside the zone, say it bounces on hedge pressure at 401, and we open at 401.80, and I wanted to buy to dip, and resilience was positive. While it does mean that this wants to be support while we're in the zone, outside of the zone, instead I plan to make the trade to test the boundary. So the open price becomes resistance in my R&R trade. So it'd be 80 cents with some kind of stop, and to make sure I keep it at least greater than 1-to-1. Right, so you're talking 80 cents or what, 8 points in the S&P, right? Then I want to make sure I at least have a good enough stop that it's at least greater than 1-to-1. So maybe I might gain 8 and lose 6, right? So I might put 400.4 and then choose a stop right here. So then I could scalp from here to here, and then if resilience just loses, right, I can bail at any point in time. So that's the whole point. So today, as an example, is that while it looks like it's selling, it's not necessarily scary yet. So if I were being very opportunistic here and I wanted to buy a bull long up, which has pressure that pushes from here, just as liquidity map alone. So what you'll do is every morning you'll wake up, you run your liquidity map on SPY and your liquidity map on VIX. Then you get your little key, your little guidebook here, and you'll say, okay, BLU has some specific setups. Okay. The first one is this black dot is the opening price. So if the opening price is here, I'm going to start labeling them. Then if we support the open, which I'm just going to draw like open right here. Right, I'm just going to draw a line all day long just to show that that's the opening price. So the idea is if we supported the open, which we did, there is a trade to some resistance that we already said earlier what it was going to be. So this is trade 1A, which is just a gap and go trade. You can use other clues to know that I want to gap and go, which we'll talk about in a second. But the next one is if you fall to blue, it comes back to this. So I need to let my guys know that this actually needs to connect to there. It's a V-shaped trade. So if you open and somehow you resist the opening price instead of support, like instead of opening and supporting, if you open and resist, then the idea is that 1B is a trade from here to here. So far, so good. The way that I teach, it's easy to follow and understand. Oh, no problem. Well, I appreciate that. It makes me feel good. So 1A would be like, I'd buy here for the go. And then 1B is like, well, if it falls to there and comes back, I'm going to exit that trade at that opening spot right there. So 1B is like a V-shaped trade to say that if the opening, there's volume at the open, right? And if it falls and it hits that just hedge pressure, that's just that subtle net long imbalance, or that long, not same balance, that long pressure, then I would say that like I bought maybe one contract in the S&P, and then 1B is an option to add to my position there, make sure my R&R considers both of them. So an example is if I bought one contract at the open for some rally, right? And I'm just going to use a different color. Let's use like, I don't know, let's grab something around pink. Does that look good? Okay. So I bought one, say that right here, I bought one ES. And let's say that I did like predicting profits, predicting price targets. And I came up with this 404 was my target. Let's just say that 404 is my target. So my trade 1A, I say I bought at the open to have this go from here to there. And let's just assume for the sake of the argument that 402 is the open. So if I bought one ES, 402 to 404 is 2 points of run, right? Gosh, my thing is just, there we go. Plus 2. And then of course, where's my stop? Well, you'll learn when you do our courses that my stops are always going to be, the set stops would be if I lose hedge pressure in this instance, minus a point, okay? So 400. So clearly at 402 to 404, it's plus 2 on the reward side. And then let's do the risk side, right? So if I expect hedge pressure to bounce and it breaks below it, then I know I'm out of the trade. So how far below it am I considering bailing to consider 401 broken? So we always give it one extra strike distance as a buffer, like as just an example to account for any kind of volatility or something. So say that I'm looking for 2 points on the run and the risk is also 2 points, because if it opens at 400 and I want to 402 and I want to stop 1 point below here is 2. So it's like a 1-to-1 trade, right? I open, I can get like one little bit of a trade. I can either get 2 or lose 2. It's kind of a coin flip. But the secret comes down to the idea that if it falls to here and I trade back to there, 1B can say, well, if I bought one and it loses, or if I buy one contract and I go to 401, what's my loss? I can calculate how much that is. So the first thing you do is you calculate your loss on this risk. And you can say, well, I'm only losing, I don't know, 3% of my futures account. And my daily limit is, I don't want to lose more than 10%. I'm making up numbers. You come up with your limit and we teach you how to do that. But say that your daily loss limit is 10%. And this one ES contract, you're only down 3%, which means you're still well within budget. So the idea is that I can do a second trade 1B and calculate. As long as I'm not blowing up my account, I can double down for this particular trade. And the secret to day trading successfully is not picking the right direction or not picking the wrong direction. It's managing your trade and managing your positions, right? So for one ES contract, the option was I can get a 2-to-do trade. But if we dip to there, then from here to here, let's do a quiz, right? If I wanted to add to my position and I still want to stop at all of them at 400, so I can stop out of 1A and stop out of 1B as well, but I'm still looking for that 400 possible target. This particular contract has a different setup. Now I don't look for this guy to break to there. I just want this one to break to there. This one I want to go to there, just like it shows. So in the quickie R&R, what is the risk to reward on this trade from here just back to the open? Remember, 401 to 402 with a 1 point stop is also 1-to-1, right? So the idea is I can add to my position to get it there. Now it's 1-to-1 if I buy one more ES contract. But if I buy 2 more, the overall trade is different. If I buy 1 here and 2 more there, then the idea is if I retrace to there, actually if I buy 1 and 1 and I trade to there, I still made money. If I buy 1 and buy 2 more, then my cost basis is 1/3 of the way up. And so now I could actually lower my cost basis when I'm still in that area to be bullish. And managing a cost basis and managing risk like this is the secret to day trading successfully. Knowing where you're going to lose, are you going to add or are you going to cut? And that's the stuff you guys never had with any maybe trading education before, because most trading education is just charting education, teaching how indicators work, not teaching you how to manage a position or manage your risk or manage your trade while you're doing it. Do you understand? So now I can actually look for different setups. Now, if I wanted to take the original trade I want, because all signs still show good, then while this one is a 2 to 2, this one is a 3 to 1. So if I buy 2 more here, right? If I say that I buy 1 ES and down here I bought 2 more, right? And I determine that while of the 2, maybe I want 1 to go there and 1 to go there. So one of them in trade B, so I have 1 ES and another ES. I'm going to buy 2 of them. So I want one of them to also be that run back to open, a 1-to-1 trade. But this one I can say I'm going to hold on to half of it to get that 3-to-1 trade. So I'm going to double down. Heck, maybe I might even triple down. Let's do 1 more ES again for that same 3-to-1. So, and I would make sure that at this moment in time, I'm not doing it as it's falling. I'm not calculating it. I'm calculating it now. If I wanted to long from here, I've got this entire setup to say, well, I can have 1 contract at 2 to 2. If it falls to here, I can add 1 more at 1 to 1, and I can add a couple more at 3 to 1. So I'm going to say, and this setup is I'm going to buy 1, buy 3 more, close out of 1, and if it goes, hold on to the other 2 for that. And so the whole way down, I can calculate any one of these for my max loss of the day, right? What is my max loss of this entire plan? Oh crap, that goes 12% and I set 10% as my max loss or whatever. So let's not do that last one because it's going to put me overboard. Let's just do buy 1 and buy 2 more. That keeps me in the budget. Good. So the idea is that you're planning your trade before you do it. You're not waiting for you to get there to decide when you plan it. You're literally planning it right when you get it. Does that make sense? So as a futures trader, a lot of tools are useful for this. I am a futures trader. I got started in trading futures. Well, not started in my trading journey, but started when I was trading futures. I had a futures trading stream before we built Rocket Scooter. Was streaming on YouTube for about a year. Went on a fully transparent, full account balance and history shown. Almost 80% win rate, 70-day streak, and I turned a $6,700 futures account into $95,000 over the course of, I think, like the 9 months I was streaming. So I showed just how I traded that account, you know, essentially, and it was all shown live on stream. Many of the Rocket Scooter folks were here for the entire journey, and all I did was scalp S&P and NASDAQ futures. Again, like close to an 80% win rate. Doesn't mean you guys can easily repeat that. But with a lot of practice, you can certainly improve your trading. And hopefully with the stuff we have, certainly will help you plan your trading better because you have the ability to plan instead of just react. So I can't say that I give you performance improvement. That wouldn't be like ethical, right? To say that use our stuff, you'll get better. I think that people that say that need to be fired from a cannon into the sun because that's not cool. Make promises to people. Trading performance is really based on how good the trader is. But I can tell you, what we'll give you are tools that will allow you to have more flexibility in planning and more, I guess, concrete setups that you can do that are repeatable for you to know risk and reward. So ideally, as you can calculate risk and calculate reward before you do every trade, you're miles ahead of where you were without it. So whether you're right or wrong, it still doesn't matter. You know where you're getting in, where you're getting out, and where you're stopping every time. And you compare that to what you're willing to lose based on rules you set for yourself. Now, the best part is Rocket Scooter is about to automate all of that into something called Trade Planner, a new tool we're releasing to allow you to do what I just did manually, automated with an algorithm. So it's going to basically allow you to take those boxes, move them around. This is where I want to exit. No, I want to change it to here, and then it'll give you an output. This is your risk and reward, how much you're going to lose, what's your percent of your account. You set rules. It'll give you a flag and say, ooh, that's beyond your tolerance. You don't want to lose that much, and your plan makes that physically possible. Imagine trading one of those trading combines. You're trying to get a funded account. They say 5% drawdown. You can go to Rocket Scooter and click 5% drawdown, and your account is connected to it because you're gonna be able to connect your brokerage account to our platform pretty soon and trade through it. And so it will know your max drawdown, say for your trade of 8 trading combine you're trying to pass, and you say 5%, and any trade plan you do, it'll immediately flag before you do it, hey, that's gonna lose 5% if it hits hedge pressure. Does that make sense? So you have the ability to plan your trade risk reward before you do anything. I prefer not to average down. Human psychology forces you to keep averaging down. Right, so here's the difference, right? Depending on what kind of trading you're doing, your 401k, right? Your 401k, when you retire, will always go up. You know what their strategy is? Averaging down. That's the key takeaway of why the greatest, most successful strategy on the planet is your retirement account, and all they do is buy, and all they do is buy, and all they do is buy, and all they do is buy. No matter what. Market's falling, they buy. Market's rallying, they buying. Always buying, always buying, always buying. And then eventually they win. So over the course of history, the stock market goes up the further out you zoom. But in a day trading sense, as John has said, is correct. You have to overcome the human psychology. But the thing is that liquidity map is my point of no return. So if you can't get over the psychology, as John is correct, you will be in a world of trouble. And the example of this bull long up, I can tell you clearly, I don't want to stop on the I don't want to be long on the other side of hedge pressure. So if I average down, it's either I long at the open and I'm not doing anything else until I hit the price I want to average down again, but I have to make sure that I stop where I want to be and it's the same place every time. So I follow the rules and I don't continuously average down unless it makes sense. And every time I choose to average down, I need to make sure that the risk and reward is still palatable for my rules. What does MR mean? Mean reversion or liquidity pocket. So mean reversion means neither bullish nor bearish. It's just the way we say it. So inside of here, the market's bullish there and bearish there, and in the middle, it's neither bullish nor bearish. And so it's balanced. As you see, resilience in front of your very eyes being positive, resilience held. Those of you who haven't tried out Rocket Scooter, I said resilience alone is $100 a month just for that, worth every penny for what it tells you. Y'all see this? That those of you that were asking, remember the S&P closed here, and I say all day long you can scalp futures from here to there. Resilience is positive. You took that bet, there's that move in that redistribution zone. You see that, Hawk? From half gap to yesterday's close. Pretty neat, right? How many people saw this and got scared of the market? How many people saw this and bought off of half gap? Now imagine if the distance, like the market gap down 30 points. So at the halfway point, you got 15 points of scalp all day long. Big gap ups and big gap downs. Resilience plays are money. You can get 8 or 9 of them a day sometimes. Now, again, this one being half a point, the scalps are really small. Maybe you want to just gamble all day long with the micro here or there just to play the game. It's fine. But, you know, ideally, bigger run, bigger go. So just to show you, all of our indicators predict where volume will be, and your futures will pivot where the SPY pivots. And if you guys, again, every pivot on our chart is predictable volume. So all the things you guys talked about today, like all these technologies out there show order flow or show volume flow or show whatever. Half gap is a guaranteed volume spike. Volume just surged right there and came down. It's predictable all day long. When you are playing that half gap area, the volume just ramps up. It's interesting how that works, but each one of our pivots will be volume spikes. So let's do some scanner settings, and I've been promising that. So imagine that's this, right? And let's do some scanner. I'll let you guys pick. So say that today, bull long up is very good. So do we agree, everybody? If it's your first day here, can you be like, hey, it's my first day here? If you've not tried the free trial, say, hey, I haven't tried the free trial. I'll go through even more basic description of something and show you guys the scanner. Are loss calcs based on capital committed or net liquidity? So it depends on what you're trying to do. I have different rules for different types of trading. Alan. So the idea is for like an options trade, my loss is capital committed because options are all or nothing, right? So you treat one, and you want to write down a little tip, write this down. Treat options trading like that one options trade is an entirely separated trading account. So a trading account that lets you infinitely flexibly day trade to your heart's content, like futures or stocks, for example, you just treat that as part of your whole account. I could buy Apple and I could buy Tesla because Apple doesn't go to zero if you lose the trade. Apple will go to zero if Apple goes bankrupt, right? You don't lose it all. So for things that you can only lose a fraction of, barring futures, you can lose it all if you're not careful. You take everything different. So anything you can't lose all of, like realistically, then I have a maximum percentage of my account that I'm willing to lose on that trade. For some people with just unleveraged stock accounts, like cash accounts, it's like, 3 to 5% on a single swing trade. You have 100 grand and your Apple's down 5%. Start questioning your trade. Something smaller, right? And I have my own rules, which I'll tell you guys my own rules as we go to our clients. We only usually do like 1 hour streams on YouTube, and we usually do 2 or 3 hours of education like this in private for Zoom every day. This kind of session right now where you guys can talk to me and I can go over stuff is what we do privately in Zoom every day for the clients. And we have a massive community. We have almost 3,700, 3,800 almost people in the Discord, almost 1,000 paid clients. So as far as trade rooms go with active, trade communities, I guess, with active paid subscribers and clients are one of the biggest in the world already. So, as a technology provider, we're different than like your average rinky-dink trade room or your indicator sales group. As we're making a platform with flexibility, you can use technical analysis on here. You'll be able to trade with this as we evolve it. We fully launched in August, this platform. We soft launched earlier in May. The launch product is the scanner, the walls, and the charts. The current patch coming out now, guys, is saving your chart settings, saving your drawings on the charts, popping out the scanner and popping out the windows. That is all coming out early next week. Our head of development's getting his gallbladder or pancreas. No, hold on. I always get the two organs confused. I think his gallbladder taken out. Very, 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 very painful. And our head of development is like the gallbladder is the boss of all the developers. He's in India. Everyone here knows and loves Amjad. Amjad is the reason Rocket Scooter is. So make sure you guys go, hit that like button while you're here. Make sure you guys go tell Amjad, best wishes, speedy recovery, AMJAD. Feel free to give him a pat on the back, boost his spirits a little bit. Amjad literally slaves over this platform night and day. Is always working. On weekends, he's always working. He has taken this as a passion project on his own. He's my head of development and runs our team of developers that are building this, and they are some of the best I've ever met. So feel free to go say at Amjad, AMJAD, in our chat in our Discord. Just give him some love. Like, do it today because he's having his surgery today. If everybody can go down there and just give him some at Amjad and be like, hey, brother, man, thanks for all you do. Just letting you guys know that. But so we have a bunch of features coming out. Just to kind of repeat the liquidity map right here. It's in the guidelines on the screen, but it'll be drawn on the chart as well with the trade planner to come with it. That's our big tool we're coming out with. And that really is going to break trading platforms in general, because there's not really, the function is basically mixing liquidity map with the spreadsheet. And the spreadsheet will tie to your brokerage account. Not only will it show you where your trade plan is, you can move it wherever you want, and it will recalculate what your loss is. And I'll continue to answer the question a second ago, who asked like how much you lose per trade. But the idea is that you can set rules, and it will make sure that your trade plan meets your rules. And so a single trade that you can't lose all of it on, if it's an unleveraged account, 3 to 5% of your account on a single trade is probably excessive. Depending on how you like to trade. In a futures account, because it's more leveraged, you expect it to swing further. In futures accounts, you can trade with less money and get more bang for your buck. So I allow more flexibility in a futures account. A single futures trade, I will lose no more than 12.5% of my account on a single trade for a day. That's for the day. So it's a ripcord if other things don't stop me first. And other things usually always stop me first, but you always need a max loss in case you have a deer in the headlights moment. Right? The market just collapses on a dime, and you automatically, like, a catalyst or something comes out and you freak out, right? You have those freak out moments where you stare at the screen. We've all been there. If you guys heard me on the Trading Camp podcast, oh, by the way, go here. I was interviewed by Trading Camp. If you guys never heard of these guys, it's a fantastic podcast. I just met these dudes and they are amazing. They're just interviewers. They talk about different things. Y'all want to see me on a podcast with these boys. They work with Kane Capital, which is a trading community. Super cool dudes. But watch this video. They interviewed me, and in that video, I'm talking about my biggest freak out moment I've ever had. It's crazy, right? Oh, Trading Camp's how you found me, dude. I love the boys, man. Those are I've become pretty close with them as of late. Just chit chatting. Like after the podcast, we talk every other day, and just. They're really interested in checking out Rocket Scooter and seeing what it's about, like using it themselves. And of course, big fan of their podcast, just because, people that interview traders and talk to them in a non-biased way and just kind of give you the floor to tell your story. I'm obsessed with that idea. Like all these traders that I know and follow, just, what's your story? Where'd they come from? And so that when I tell a little bit of my story, my background, and a lot of my, where Rocket Scooter came from and a lot of cool things. But I talk about my biggest freak out moment in my first year of trading. And I call it my folding towel story, my temporary period of insanity. My first 5-figure loss as a 28-year-old kid when I got started. I'm 41 now. Jeez Louise, I'm old. I still look good though. It's mostly the Botox, but I just dropped it in chat. Brian, scroll up two lines above you. Brian, you didn't come to my house. Brian, you haven't been to my new house, have you? You haven't been over yet. You can see in that video, you can see my background, my green screen and everything. You got to come check it out. But seriously though, when I was young, it was my biggest freak out moment, and I tell my story. It's pretty cool. And again, that's just me chit chatting about like where I came from and what I desire to have is like risk management. My background is, if you're first day here, welcome. Oh, Ben, first day here. So I'm a chemical engineer by trade. So I worked, in school, I did research, and in the industry, I worked as a reaction engineer. I worked as a unit engineer at Dow Chemical, where I ran a chemical reactor unit. So I was the lead engineer on it. Like I made all the decisions technically for that thing. So I spent my whole life in that plant writing code and writing like analysis software, writing my own tools to analyze and make my job easier. Like I had to measure, temperature gradients and hot spots and flammability risks and emissions and all the things that you monitor in a plant. And I was always writing these tools and just really diving down. As coding was something I did as a hobby when I was a kid. I taught myself coding. I used to write games when I was a kid. I used to love doing it. And so coding was something I learned early on as well. And I got older, I started getting into trading. And the tools were just not sophisticated. As an engineer, you see that, inputs, people look at price, and price goes into like a moving average. And the way the moving averages just coincidentally cross over supposed to hint that the market's going to rally, but it's like a mathematician would look at that and go, ugh, who believes that? These are anchored in the future. Like the market's trading down and the candles move up first, which bends an average based on past dating points. And then they anchor, and in the future, then you look back and it looks like it crossed over there. But in reality, and when it's live trading, it crossed over here because of the delay effect of looking at a past period polling, right? So you're like, okay, that doesn't make any sense. People are believing this. There's whole books on this particular philosophy. Market's oversold, so therefore it's likely to come up. Well, where are the statistics that support how many times at RSI 20 does it bounce? And what instrument? Is it different for stocks, different for futures? People just took it at face value and based an entire trading strategy off of it. Fibonacci's or random. There's no magic to a Fibonacci number. That's literally a random thing. There's no magic going on in the stock market with numbers. It's just silly. You can prove it the minute the FOMC says something that Wall Street doesn't like. The market doesn't care about any of that and throws it out. So then my next question was like, well, how come you have a chart on there? Your 5-minute chart is your hour-long chart is using moving averages, but the stock market's open from 9:30 to 4, right? But from 4 until 9:30 is 17 and a half hours of discontinuity where market's not trading. So your moving averages like need to end there and start over there. But they don't. They tend to continuously calculate and they don't shut themselves off. We call those dumb indicators. Not dumb as in intellectually dumb, but dumb as in not smart in a programming sense. Smart indicators will have logic built into them that say, oh, the FOMC said we're going to raise rates and market fell X amount. You know, your moving average is nice and steady and crossing over at a certain threshold. Turn them off. Don't use them. And then normalize the data based on that random gap. The market just jumps to a new price. And then we started like looking at the mechanics of how the market actually works. And then there's certain protocols that are existing on the Globex. The Globex is an electronic computer that has an autopilot in a way that keeps the market stable. And there are times when the futures market just shuts down and price jumps and it opens back up on a catalyst. It's called velocity logic. So even so, like the market can be like this, and then an order flow can come through that triggers a velocity logic. When velocity logic will actually shut down the market, the Globex will ask market makers to fill the rest of the sell order and then offer them a price to do it. And then the market just magically gaps down to here and opens back up. It takes place in a split second. Your chart or your candle will look like a candle that went there, but in all honesty, the market just gapped there and you didn't see it. Well, your moving averages or your technical analysis will assume that the market continuously went there with order flow, and it didn't. So it's like, as an engineer, I go, well, that doesn't make any sense, because if the market's closer to 17 hours, there's no data. The average shouldn't still be calculating over that time period. So it made me think that like all time-based price indicators were completely useless. So as like I started my journey, I said, how do I have risk management? If the RSI falls to 20 and I want a long because I expect it to pivot, where's my stop when RSI falls to 10, falls to 5? Are there statistics that tell me when and what conditions that works and doesn't work? No. So there's really no risk management sold or allowed to you through these kind of mechanisms. So we were like, okay, so risk management, let's find a different way to do it. So when I started my journey to start to develop tools for risk management for myself, the journey led me to options where I can understand that if I can prove to you that every one of my indicators was designed to predict volume. Can y'all tell me in chat really quick, so far so good, do you believe me? And I'll give you the next spiel as I keep going. You guys believe me, right? All my indicators predict volume before it happens. Number one, it doesn't matter. The market shuts down for 17 hours. There's a catalyst. It doesn't matter. Each one of these indicators will predict volume flow for a certain mechanism. You can see it before your very eyes. Anytime you touch half gap, touch hedge pressure, touch monthly hedge pressure, you will see volume. So as a trader, if I want to long the market, why would I long anywhere that doesn't prove there can be volume? There can be volume anywhere. But in a statistical sense, 100% of the time, when you touch any one of these indicators, you will see increased volume flow because of what happens at each one of these. So our journey was to create indicators that predict volume at a price that remove time from the equation. People say, what candle chart does this work with? Guess what? You no longer have to use candle charts anymore. You no longer have to worry about what time frame. 5-minute chart, hourly chart, none of it. No more multi-time frame confluence. We've eliminated that. This is a time-independent study. If I want to buy the dip, nope. If I want to buy the dip as it's coming down, I can say, ooh, I'm a bull. I want to grab the dip. Okay, well, where's the next place I expect volume? Here. Volume certainly comes. It doesn't mean it will pivot the market, but if there's a pivot, that's the best place for it to be. Yeah, so imagine, Ben, that you don't have to learn anything about options. Options, to me, let me do the math. You just read the lines. These arrows tell you where buyers and sellers can be, and it's the basic premise of, and actually, I'm going to upgrade the liquidity map. I'm going to put a note today for us to upgrade this liquidity map for tomorrow with a little more instruction. I'm going to see my buddies here to help me out really quick. So my mom's back is hurt, so she canceled lunch today, so I'll be around for a little bit longer. So options are like where if I buy an option is just like the right to buy or sell a stock at a point in time in the future, right? And that's where I go ding, 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 because there's power in understanding. If I buy a 403 call for SPY, right, at 403 for next Friday, then I just announced to the world, I am a bull next Friday at 403. So now it doesn't matter how it gets there, the time frame it gets there. I know that there's a bull there in the future at that price. So looking at everybody's desire to be bullish or bearish in the future is forward-looking indicators, not math that's based on past data of price action. If 1 million people longed right here at the end of the day and price started going higher, how do you know they're still in the trade at any point? Your average is crossing over, say, oh, there's some longs, but have they closed their profit? Are they still long? Are they still bearish? When are they bearish? You have zero visibility of that. No way to tell. This is a way to tell. How are they still bearish or bullish? Their options are still there. The market still has that position open. So we're telling you that positions are still open. That bull is still bullish. And wake up tomorrow, that 403 is still there, still bullish. And wake up tomorrow, it's gone. That guy's not bull anymore. He gave up. That makes sense? If you're new here, I love you, Garrett. Take a chance with Matt. Your future self will be really glad you did. If you don't trade with risk management like this, or any style of risk management, even if it's not this, you're losing the game. Now, the reason I can get such a high win rate scalping is not because I picked the right directions, because I manage my trade very well. If I long the market and it goes against me, I am immediately understanding how much I'm going to lose, how much I can bet again, where I can get out to try to turn a loss into a win. The trick to maintaining a higher win rate and not trying to win more than you lose directly, like to win big, or to win big and lose small. That's not really how trading works. You can't control winning big and losing small. The market controls that. The market moves where it wants to move. Your loss is dictated on where you pull the plug. Your gain is dictated on where you pull the plug. The move to make that gain or loss possible is dictated by the market. You can't control how far the market moves. So people say win big and lose small. It's so silly. It's bet high when you're confident, bet low when you're not. Add to a losing position only within reason and only if you understand the risk associated with that addition. So as somebody had said, you can't trust human psychology of yourself. You can't. But don't make any trade until you've calculated the risk and reward to go with it every time. And if that meets your tolerance of your set rules for yourself, then it's okay. But only if you commit to pulling the ripcord when you say you will, and no bag holding with that deer in the headlights, right? So we're going to make our program, once it connects to your brokerage account, to study your habits and follow your rules and teach you based on your own mistakes with machine learning and a little AI built into the background. So it's going to be studying you and also telling you ways you can improve or improve your own rule set based on the probability of what you're doing right or wrong. Oh, you familiar yourself with Tradebait? I think you'll really like it. And again, I might say I like Tradebait because of the simplicity of it. It's not bloated with a bunch of features. I don't use technical indicators anymore. So I just want to see a clean chart. I want to click one button to buy, one button to close. I don't want it to be like laggy, right? And I'm a big fan of Tradebait. It's just such a cool, because you have a chart and a DOM in the same place. To me, that's so useful. You don't have to go to two different screens. You just stare at it and you're just basically firing orders. If I'm using Rocket Scooter, I can put like Tradebait DOM right here to the side. And Tradebait's going to be one of the first brokerages we connect to as well. So as a matter of fact, the first brokerage we connect to will be Tradebait, if I remember correctly. So you'll be able to log into your Tradebait account through Rocket Scooter using our DOM to trade their futures. Dabble with options at AMC. Yeah, like trading options is like a league of its own. Like trading options is the hardest thing to trade, to be perfectly honest. Not easy to trade options. The easiest thing to trade, in my opinion, is futures. Index futures only. There's so many different, as long as you can manage the risk and the leverage, any leveraged account has the same problem. You can lose more than you started with. Don't get in that boat. But as long as you manage your risk, futures is the easiest place to start. You can trade micro futures and now nano futures. You can trade with a couple bucks. You don't have to have an account minimum, no PDT rule. Taxes are better. You can trade overnight. You can trade around the clock pretty much to match your trading style. So futures is really the place that has something for everybody. And it's easy for beginners because there's no complexity like Greeks, data decay, no volatility decay that eats into the value of your trade. So trading options is like, I need to pick the direction and how it gets there and when it gets there. And then that's like guessing three things instead of up or down. You're trading a stock. You make money if it goes up. You make money if it goes down. If it goes nowhere, you lose nothing. You could sit there forever and lose nothing if it stays flat. An option, if it stays flat, your win is decaying. You're making less or losing more. So the complexity of options are you have to guess not only where it goes, but how it gets there and when it gets there. It's the time. And so if it doesn't get there, you lose all of it. So the question from earlier, do you use a percent of your account or percent of the trade? And options, since you can lose it all, it's always a percent of the trade. My rule of thumb, 30% max, I pull the cord on an options trade if I'm down 30% on a day trade. So if I commit $5,000 to the day trade, now the question is how much can you commit? I would never commit more than 10% of my account on any one particular trade. I want to diversify. I need 10 different things to buy. So say that I have 100,000, I want to put 10 grand into an Apple swing. That Apple swing loses 30% of that 10 grand or 3K. It's 3% of my overall account, but 30% of the options. So if options is a total loss, I don't want to lose more than 30% for the most part. And I'll give it a little fat if it's run into a support that I want to buy it again or something. But 30% is a good rule of thumb. Never lose more than half the value of an options trade on a day trade. That's for sure. 20-30% is most people's rule of thumb that I know. That way you have a little bit about flexibility to hedge your trade. So the reason not to go so heavy is because you at least need more than half your account available just to maneuver and hedge your losses or something like that is very helpful. Will IB work with Rocket Scooter? Yes, we do have interactive brokers API connectability available. We have interactive brokers. We have Thinkorswim. We have Trade Station, I believe. Trade Alpaca. There's a list of them. We're going to start with Tradevate just to pilot the initial launch of that. And I'll be scalping futures through that if I can here, but also options as well. If you're new, at least sign up for the trial and you'll sign up for a month if you like it. Love you, Greco. Thank you. And don't forget to like the stream. Yeah. Thank you, buddy. So make sure you guys go to rocketseer.com, get the free trial, walk you through some stuff. I'll be here for like a little bit. We can go to Zoom and I'll do some private chats with you guys. There's a Black Friday thing. If you guys just want to jump in, it's $100, half price forever. We won't charge you any additional for future data feeds like crypto or futures or Forex once we get that in our platform. If you lock in the grandfather, first 1,000 people will get that grandfathered rate. It's 50% off the sub. So it's $100 a month. It's cheaper than anything out there. It's an entire trading platform that's going to have all these additional things. And I'm going to do scanner settings in a Zoom call. So let's do that. I'll pile into Zoom. Go to our Discord. It's free. It comes with your thing. There's a free trial of everything. Grab it all. We'll meet up again in maybe 10 minutes. In our Discord, I'll drop a Zoom link. I want you guys all to come there. And we'll have like a private session where you guys can ask me questions a little bit more off the stream. And I'll just kind of do that there. So I want you guys to come over. Yo, 6 later, bud. Have a good Thanksgiving weekend. So Fashion, Ben, Hawk, all you guys come over, okay? We'll do scanner settings. I've been saying that. Risk management, scanner settings, and walk you through some of the stuff, okay? So everybody, I'll give you the link really quick. Go here. Check this out. Can I make the market go up? I'm about to start yelling at it to make it go up. 150, bro. Ollie, my man, dude. That's right. You said you're Mississippi, right? Southern brothers and sisters. Give me your I'm from the South comment. If you down here, Texas, Louisiana, anywhere in the South. Who else lives down in the South? Before I get out of here, I'm going to do a farewell Southern greeting to all my Southern family and friends. As we say in Texas, I'm getting out of here. So all y'all have a good day. I'm fixing the log out. Go to our Discord. We'll see you guys in a little bit. I'm going to start the future small account challenge when we can trade futures to the Rocket Scooter. That's the big announcement. But get over there. We'll see y'all later. We love you. Have a good one. Bye.